Welcome to Breaking News to Trading Moves. Today, we're looking at the financial reactions after President Trump's recent comments endorsing cannabidiol, CBD, specifically mentioning its potential use and coverage in senior healthcare.
Right. And that statement, which came via video and some public remarks, well, it definitely got the market's attention again. It brought back focus on two key regulatory possibilities. One is the rescheduling of cannabis in the U.S. under the Controlled Substances Act. And the other, maybe more directly related here, is the idea of Medicare possibly covering CBD products for, older adults.
Yeah, and the market didn't wait around. Reuters noted some pretty immediate moves, pre-market gains around 20% for several cannabis stocks, plus a noticeable jump in activity for U.S. cannabis ETFs. So our aim here is to sort of figure out which specific companies might benefit from this sentiment and which established players might actually face some pressure because of it.
Exactly. And the positive moves aren't just general good feelings. It's tied to some real financial expectations. Increased demand from seniors is part of it, sure. But the big thing everyone's watching is potential regulatory changes, especially around taxes. We're talking Section 280E.
Okay, let's pause there. Section 280E, for listeners who aren't maybe deep in the weeds of cannabis tax law, why is that specific section so important?
It's probably the single biggest lever for these companies' valuations. You see, because cannabis is still illegal federally, companies in this space can't deduct ordinary business expenses, things like rent, payroll, utilities, normal costs for any other business.
So wait, they pay federal taxes on their gross income, essentially, not on their actual profit after expenses?
That's precisely it.
Right.
It absolutely crushes their margins, makes it really hard for them to compete, harder to attract traditional investment. So rescheduling, if it happens, would likely remove that 280E restriction. And that would instantly boost potential profitability for pretty much any company touching the plant in the U.S.
Yeah.
Growers, retailers. Which is why the first group of winners we see reacting strongly is cannabis producers.
Right. And looking at those specific producers, we saw movement in names like Tilray Brands, that's ticker TLRY, and Canopy Growth, ticker CGC.
Yep, CNGC.
These are already listed. They trade actively, so they're often the quickest way investors react to this kind of regulatory news flow.
And it's not just the tax relief, though that's huge. Rescheduling, and especially if Medicare gets involved down the line, could also mean much easier access to U.S. capital markets. Yeah. Being able to raise money more easily, more cheaply, that's critical if you want to scale up distribution, especially if you're suddenly targeting a massive new demographic like seniors.
Okay, that makes sense for the producers. What about the second category that saw a lift? That's broader. U.S. cannabis exposure via ETFs.
Yeah, exchange-traded funds. These aren't just for individual investors anymore. When big news hits, like potential rescheduling, they often become the fastest way for larger institutional money to get exposure. It's a liquidity thing.
Like a quick proxy for the whole sector's sentiment.
Exactly. The big money wants to place a bet on the sector improving before they necessarily pick individual stocks. And we saw trading volumes jump right away in funds like the Advisor Shares Pure U.S. Cannabis ETF, that's MSOS, and also the Advisor Shares Pure Cannabis ETF, which is YOLO. Their activity really reflects that immediate consensus view. Things might be looking up for the sector.
All right, so producers and ETFs. Then there's a third category of winners, maybe less obvious ones, strategic stakeholders and hemp CBD consumer plays. These aren't necessarily the growers themselves, right?
No, these are often larger established companies. Think consumer goods, maybe adult beverages. They stand to gain because they already have what many cannabis startups lack: serious distribution networks, reaching into major retail chains, plus strong financial backing. If CBD really does become more mainstream for seniors, maybe even with insurance coverage, their existing infrastructure becomes incredibly valuable for getting products out there.
So we're thinking about companies like Constellation Brands, ticker STZ. They have that big stake in Canopy Growth, CGC.
Correct. That gives them indirect exposure and leverage.
And maybe Altria, MO, with its investment in Kronos Group, CRON.
Exactly. These companies have the market access and the financial stability to potentially capitalize if CBD moves more into the consumer health space, especially for seniors.
Okay, so that outlines the potential upside from this news. But this kind of talk, especially linking CBD to senior healthcare and Medicare, it doesn't happen in a vacuum. It naturally leads us to think about who might be on the other side. Which established sectors could face some new competition?
Definitely. The conversation immediately puts pressure on some existing markets. The first and perhaps most direct category facing headwinds would be the traditional OTC pain and sleep brands. Over-the-counter stuff. Think about it. If seniors start shifting some of their spending, maybe their doctor mentions CBD or a family member suggests it, for common issues like arthritis pain, inflammation, trouble sleeping, well, that money might come away from the legacy brands they usually buy.
That's a direct substitution effect. And it hits some big players. We're looking at companies represented by, say, KVUE. That portfolio includes huge brands like Tylenol and Motrin, both heavily used by older adults for pain relief.
Precisely. And also companies like PRGO. They're very focused on store-brand OTC products. Things like sleep aids, generic pain relievers. They can see more competition on price and just overall demand.
Okay, OTC, pain and sleep. What's the next area feeling the pressure?
It's related, but slightly different. Generic opioid and legacy prescription pain portfolios. This news kind of adds fuel to an existing trend, right? The broader societal and political discussion about moving away from traditional prescription pain management, especially opioids, towards alternatives.
And that overall narrative can weigh on the outlook for companies reliant on those older prescription volumes. So that could include firms with large generic pain drug businesses like TEVA.
PEVA is a good example, yes. And also maybe companies like HLN. They handle well-known pain care brands like Voltaren, which in the U.S. is often accessed via an ADR. The idea is that as consumers and potentially doctors look more towards non-traditional options like CBD, these legacy prescription products could face pressure on volume, maybe even pricing over time.
Right. Okay, one more category to consider on the potential loser side. This one's maybe a bit further down the chain, pharmacy benefit managers, or PBMs.
Yeah, PBMs. This is more of a potential long-term consideration.
Maybe just quickly remind listeners what PBMs do.
Sure. PBMs basically manage prescription drug benefits for insurers, employers, Medicare Part D plans. They create the lists of covered drugs, the formularies, and they negotiate rebates with drug manufacturers. Their business model relies heavily on high volumes of prescription drugs moving through the system and managing the costs around that. They earn revenue from fees and those negotiated rebates.
Got it. So how does the CBD discussion potentially affect them?
Well, their profitability is linked to managing large volumes of prescriptions, often high-cost ones where they can negotiate significant rebates. If CBD adoption grows substantially, and especially if it ever gained widespread insurance or Medicare coverage, and started leading to even a modest reduction in the use of certain traditional prescriptions for things like chronic pain or anxiety, it could eventually start to chip away at the volume of scripts they manage.
Fewer traditional scripts means less leverage for negotiating rebates, maybe smaller spreads for them to capture. The overall volume shrinks a bit.
That's the potential long-term concern. It could compress their economics over time if a non-traditional alternative like CBD really takes hold in a big market like senior care.
So that's why we might think about the potential impact on companies like CI, which includes Express Scripts,
Evernorth Express Scripts.
and UNH, which owns Optum RX.
Right. Their growth assumptions are partly based on continued high prescription utilization. A major shift towards non-prescription or non-traditional alternatives in a large patient group could theoretically challenge that down the road.
So to sum it up, a single political statement focusing on CBD for seniors seems to have quickly triggered opposing moves in the market. You have potential gains for the cannabis sector, hungry for any sign of regulatory progress, and at the same time, potential competitive pressure building on established consumer health and even some parts of the healthcare system like PBMs.
Yeah, it highlights how interconnected these things can be. And maybe a final thought for you, the listener, to consider is this. What are the broader implications if non-traditional approaches like CBD keep gaining traction? Especially if they get more political support and consumer acceptance for managing chronic conditions, particularly among seniors. How might that eventually influence patient expectations or even healthcare policy around coverage?
Definitely something to think about. And before we wrap up, we absolutely must remind you that this discussion is not financial advice. It's not a recommendation to buy or sell any security mentioned. This examination is purely based on the opinion of the original author of the material we reviewed. Thank you for joining us for Breaking News to Trading Moves.